Welcome to the Iowa Economy Podcast. I'm your host, Chris Conetzkey, president of BPC and publisher of the Business Record. The Iowa Economy Podcast is your place to get the economic insights you need to help your business stay ahead of Iowa's economic curve. And there's plenty going on that makes it hard to stay ahead, especially right now. We've got some new whiplash on tariff rulings, AI uncertainty that's flaring in the markets, and of course, there's a little ongoing operation in Iran that's creating a bunch of uncertainty. So there is no shortage of uncertainty right now, but we've got two fantastic guests with us here today who are going to help us digest what's happening in the economy and perhaps a little bit of insight into what might be happening in the future. So with us today, we have Bryce Kanago. He's a professor in the economics department at University of Northern Iowa with a focus of macroeconomics and monetary economics, especially in the areas of inflation and the business cycle. Welcome.
Thank you.
And we have Jerrica Marshall. She's the executive director of the Directors Council and a member of the Advisory Council on Small Business, Community, and Economic Development, Agriculture, and Labor for the Federal Reserve Bank of Chicago. It's a fancy way of saying she gets to help provide the Fed with some insight from on the ground. And so we'll be able to pick her brain a little bit later. We're going to have an opportunity to hear more from Jerrica later in the program. We'll ask her a little bit more about that experience as well, and maybe provide some of the insights that she's learned from that experience. But before we get to Jerrica, we're going to have Bryce kind of get us up to speed on what has been happening in the economy by providing a couple insights here in the next 3 minutes. So this is the economy in three, and Bryce, I'm going to put you on the spot. You get to go ahead and give us three insights into what's going on here in the economy right now.
Thanks, Chris. I'm going to do my insights by talking about some high-level numbers. So we'll look at GDP first. GDP growth in over the last year was about average, maybe a little low. It was pulled down a little bit by the government shutdown, and it was buoyed a little bit by AI investment spending. And then we can turn to the unemployment rate. The unemployment rate is just a little low compared to where it would be if the economy was operating at a normal rate. Then next to employment, the employment has stagnated. There wasn't much of an increase in employment over the last year or so. That was buoyed by health sector increasing a little bit. The stagnation appears to be due to continued smaller population growth and to immigration policies. Inflation is still elevated a little bit. It's about a half a percentage point to 0.75 of a percentage point above what the Fed would like to see. Some of the reason for it being as high as it is, the tariffs have mostly abated now. The tariffs have a kind of a one-time effect on the price level, and that's mostly disappeared. My three concerns about all four of those are the ongoing war in Iran and what it may do to oil prices and the budget deficit and continued political uncertainty.
You did a good job getting us teed up here, ready to talk a little bit more. We're going to bring Jerrica back as well, so she can ask some questions. I don't know that a week ago, as I was planning to have you on, we were going to be talking about Iran and the potential implications, but maybe that's a good spot to start. You said you're kind of watching that, and there's, I imagine, a ton of uncertainty around this. So I would hate to ask you to predict what's going to happen, but you mentioned oil prices, and maybe just help frame up how we might think about something like this and what the effects could look like.
So two major effects. One is that it raises the cost of doing business. And so we'd expect that to put pressures on prices. And as prices go up, we'd expect spending to fall a little bit. And as gas prices go up, that puts us constrained on consumption, especially for lower income households that right now are kind of stressed anyway. And so we would see a decrease in consumption and a decrease in spending and an increase in inflation. So kind of the double bad in the sense that rising oil prices would raise inflation and probably reduce output and raise unemployment.
Are there any lessons perhaps from past conflicts that we might be able to glean and at least try to anticipate what might happen?
Not so much from past conflicts. We do know that in the past, increases in oil prices have often been a contributing factor to recessions. I think looking forward a little bit, it's going to depend upon how long this lasts. So the more prolonged it is, the more likely prices are likely to stay higher and more likely that there's opportunity for that there's potential for the economy to turn down.
We talked a little bit about with inflation, of course, the Fed had a plan, I think, for how they were trying to approach things. And I imagine this is one new factor that they'll have to consider. I wonder what you might think that, how that might influence how they're thinking going forward.
That's tough. If it makes inflation higher, they'll tend to be wanting to make interest rates higher. But if it also reduces output, then they'll want to be making the interest rates lower. Before this happened, I would have guessed, and I think this is consistent with what the market is thinking, that they would have brought interest rates down by about a half a percentage point over the course of maybe a year and a half. I think that's kind of where we would see things go in the long run if it hadn't been for what's going on now and the uncertainty it's created.
From an employment standpoint, you mentioned that we've kind of been at a similar level in some fashion. I wonder if you have some more insight into that. You mentioned healthcare as one of the areas that's been buoying employment. Is that is that something that can continue in that fashion? Obviously, there's an aging population question here, so I think there's probably some of that, but it feels like that's pretty sector specific. So I'm just curious what else you're seeing in that area.
So yeah, mostly the healthcare. So I've seen we're getting some signals about AI maybe creating fewer jobs or taking away jobs from people that are kind of entry level, and the trend in healthcare is likely to continue as the population gets older, and a big portion of that has been an increase in demand for home health care. And you've probably seen commercials for that where you can get somebody to come into the home instead of being in a nursing home or assisted living.
We'll have more from our guests in a moment, but we are able to bring great conversations like this to you because of the support of our sponsors. This next segment, Right There With You, is brought to you by CLA, in which all year long we'll have the privilege to tap into the rich wealth of knowledge and experience that CLA brings its clients in order to provide you with a hand on your shoulder and perhaps just a little bit of extra clarity in the midst of the economic haze. CLA is a professional services firm that provides opportunities for clients, people, and communities through industry-focused wealth advisory, digital audit, tax consulting, and outsourcing services. And with me today is Ashley Mahoney. She's a principal with the healthcare group at CLA, specializing in a variety of strategic, financial, and operational services for healthcare clients across the care continuum. Ashley, welcome to the segment here. There's, of course, a ton of disruption and uncertainty in the healthcare space. I wonder if you might be able to zoom out just a little bit and share what stands out to you as the most important force shaping this sector over the next 10 years.
Yeah, that's a great question. And again, thanks for having me on the podcast today. So when I think about the most impactful or most important force shaping healthcare right now, it's really got to be the demographics and specifically of the aging population. That's really the trend that's driving everything that we're talking about in healthcare right now. There's going to be about 80 million 65 plus individuals by 2040 and 2 billion by 2050. And that really is not a short-term issue. That's a long-term shift, and it's affecting workforce time and really how we're delivering care to those individuals.
When you think about some of those trends and you're trying to think about one of those aspects is healthcare costs. And I know those are projected to be rising faster, perhaps maybe than the broader economy. How is that shaping decisions for providers and organizations that are having to think about those costs?
Yeah, it's really forcing organizations to be more disciplined about how they operate. Margins we've seen are very tight right now. Organizations are having difficulty making long-term decisions. It's harder to make some of those long-term decisions, and they're really thinking about, organizations are thinking about how the care is delivered. So it's moving more from an inpatient to outpatient and home-based services to really build on that efficiency and aligning those costs with outcomes.
There's so much, like you said, people are delaying decisions. They want to make it. If organizations are unsure of where to start, what's maybe some one clear step that they could be taking to help prepare for that coming decade?
Yeah, that's a great question, Chris. We recommend that organizations start with revisiting their strategic plan, using all of this data at our fingertips that we have now, and scenario planning is a great place to start. CLA has a wonderful tool, CLA Intuition, that we use to help organizations walk through some of these scenarios, picking out a couple clear priorities for organizations to focus on, such as workforce or policy or technology is really big right now, can help those leaders have confidence and not feel overwhelmed with decisions.
Well, I know population, the changing demographics is, of course, affecting not only healthcare, but a number of different industries. It's something I'm sure we'll continue to be talking about on the Iowa Economy podcast. Iowa, in particular, has an exceptionally aging population. So, Ashley, thank you for giving us a little bit of insight, perhaps on how organizations might be able to think about that. And, of course, thanks to our audience for joining us for Right There With You. I'm glad CLA will be right there with us all year long. And if you want to learn more from Ashley, you can contact her at Mahoney at claconnect.com and find additional CLA resources at www.claconnect.com/resources. Jerrica, I'm curious from an employment standpoint, maybe what you're seeing on the ground and some of the folks that you're working with and your organization's work.
Yeah, I mean, we're seeing similar issues when it comes to unemployment. As you know, One Economy, our data-driven report, is focusing on Black Polk County and the needs identified for that community. And when we're seeing unemployment rates at 9%, a little over 9%, in comparison to the majority is at 4%, that causes quite a bit of concern for us in the community. I know the Federal Reserve President Goolsbee had recently done an interview where we were talking more about consumer spending and that kind of being the primary driver for growth right now, knowing that unemployment, is remaining low, but overall job creation numbers have been kind of modest. So really been relying on that consumer spending. And like you pointed out earlier, I have concerns knowing that we have this war with Iran and other things coming up that really are going to impact the ability to spend to keep us at a good economic space moving forward and really trying to work towards that goal of reducing interest rates.
Bryce, when you think of consumer spending and some of the pressures that puts on there, I wonder what other insight you might have as you think about that right now, and then maybe what some of these new pressures might look like.
So I'll go back for just a little bit and say consumption is becoming harder to predict, in part because the top 10% of income earners spend about 50% now. And so their spending seems to be less effective. So we're more concerned about the spending of those low-income households, which if you think about what they spend their money on, that gives you some ideas about which businesses might be concerned about the pressures on households, and especially lower income households. Even middle income households, their share of spending has dropped from something like 30% to 25%. And there's been a significant increase in delinquency rates on automobile loans and credit card loans, which again indicates that consumers are kind of stressed, and they've also been suffering from prices being higher from past inflation that hasn't quite caught up, and their income hasn't maybe quite caught up with that yet. And so they're in kind of a tough spot. I would classify them as many of them as being credit constrained.
It's interesting when you think about when you start to notice it, that's when it's interesting. I was joking with a friend. I went to Subway and I had a $15 lunch, and I went, "That's not the $5 footlong anymore." And that's a very specific indicator. Maybe that's not an official economic indicator, but it was the first time I had noticed in that way, in that stark way, that there had clearly been price increase built into what was going on. And so you do start to think about that. Will I keep going to Subway? Probably, if I have to, right? We're not sponsored by Subway or Jimmy John's, but maybe we could be. I think when you think about the pressures that put on folks, though, so Jerrica, maybe talk a little bit more about the decision making that's going on. You mentioned auto loan delinquencies and housing; those are critical necessities. Some of the things that you might have to start first cutting. I'm just curious what maybe you're experiencing and seeing.
Yeah, I think I mean, right on when we have to make decisions about what's important in households. Average income for Black Polk County is about $44,000 right now. And so knowing that that is the income level that we're dealing with with our community and population, they are making choices about what we can spend money on. So again, we're going back to that ability to have consumer spending because they're cutting back on some of those recreational spending. That's no longer happening. People are waiting to purchase homes or purchase cars in because of this kind of ambiguous state that we're in. There's a nervousness to make large purchases and decisions right now, and that's overall affecting our economy as well. We want to be able to have this uh, economic opportunity where folks are able to spend and feel comfortable, right? To be able to live, work, and play within in Des Moines. And some of that is going to be jeopardized because of this uncertainty. And so we're seeing changes in, credit utilization. Of course, we've always reported on the underrepresentation of of Blackpool County within the credit system. So we are continuously trying to push those opportunities. Access to capital for small businesses has been a big one as well because they're trying to expand and grow, but also concerned about their own clientele and who's purchasing from them on a regular basis. So it's just an unease right now that we want to try to help folks feel a little bit better about so they can spend in a way that will help drive economic growth for Des Moines.
Well, we are going to shift a little bit and talk to you a little bit more, Jerrica, right now, and pick your brain about maybe some more of what you're seeing at the local level, but also your experience as a member of the advisory council. So maybe for those that aren't familiar, maybe talk a little bit about the purpose of the advisory council, and then maybe a little bit about how it operates.
Yes. So, as you said, I serve on the Community and Economic Development Subcouncil of the Federal Reserve Bank of Chicago. So, our role really is to try to provide insight to the Federal Reserve about what the communities across the region are experiencing related to economic mobility. We're covering Iowa, parts of Illinois, Indiana, Michigan, and I believe Wisconsin as well. So we're really able to talk about the ground perspectives about issues, housing stability, workforce participation, access to credit again, small business. So in my case, I'm really there to kind of talk about the work that we provided in One Economy report, to get the opportunity to have conversations with Jerome Powell about what we're seeing in that One Economy initiative is very important for us and was really impactful in some of the conversation we're having in the room. Everybody's coming from a different viewpoint. We have a lot of different voices in the room.
How big? How big? How many
Really
people are?
important.
How many people are part of uh, the board?
Yeah, so it's on the advisory council. I would say there's about 40 of us sitting on that council. So it's a big room. And so we're able to kind of interject our moments, but really a lot of the opportunity comes in that connection and making conversation even afterwards and providing the One Economy report so they have that data to take back with them and kind of digest. So it's a big room with a lot of incredible voices in it.
Now, because there's kind of a veil of secrecy around all this, is it one big giant room that you're sitting in with 40 people? I'm just imagining what this might look like. So,
It is. It's one giant room with a bunch of folks and a lot of microphones, but it's really the opportunity to hear different viewpoints. We come in and sometimes we're hearing, like I said, from Jerome himself, Powell, or hear from President Goolsbee about where we're seeing for the region, and then we're allowed the opportunity. A lot of it is just us talking to each other, us sharing our perspectives. They'll ask us about agriculture and small business, what we're seeing as trends, and really able to kind of bounce off each other and sometimes just validate each other that we're all seeing similar things. And at times it gets a little political in the room, but it's all with the same shared goal of making sure that when we leave that room, people feel like they have a good understanding about what's happening in your region.
and how frequently do you guys actually meet?
We meet twice a year. So we have programming throughout the year, of course, where we're having smaller conversations and able to attend Federal Reserve events and conferences. But for our large conversations, we have those twice a year. One's coming up in just about a month.
Well, I'm imagining the 40 people in the room. So have you had the opportunity to buzz in and get your word into the equation?
Absolutely. That's what it comes down to. A lot of times you'll just see a lot of nodding heads around the room, like, yes, in collaboration, just because we don't have a lot of time and we have a lot of information to cover. So we do a lot of affirming, and then we'll definitely share new ideas and new initiatives that other communities are working on.
So is there something that you've gotten to speak about in that setting that you've tried to infuse into the equation?
Yeah, funny enough, the biggest conversation I had was around agriculture, which is not my lane at all. But it because we know, I mean, we are one of the largest producers of corn and soybeans within the state. It affects everybody. What happens in the world of agriculture affects the entire state. So when we're having conversations about where is the status of agriculture and what are the ripple effects of that, that's really a conversation that we can still impact and have a viewpoint on, because we know that affects our workforce. It affects how our other businesses do business within Des Moines. And so we wanted to make sure we were weighing in on that, because there's just different viewpoints sometimes.
Now, is this when you're preparing to go there? What does that look like? Do you talk to folks around here and say, what should I try to infuse into the conversation? Is this the Jerrica show and whatever you feel like you want to make sure is in there? I'm just kind of curious. It's an interesting.
No, I do have conversations about what we see. To be honest, I go to a lot of business record events, so I
Well,
can't get up to date on what the region is seeing, and I take that information back to the Fed Reserve. But I'm not the only one there that is representing the state of Iowa. There are at least two other council members that are also representing, I believe, Ames and Waukee area as well. And so we're able to kind of work on it together and have different conversations even in that room as well. But I take the one economy data with me everywhere I go.
Good. What is some of the one economy data that maybe you'd want to make sure folks that are watching today that maybe they take something away from this?
Yes, a lot of the data that we're talking about is the loss of income in this region. Like, we really wanted everybody to understand that One Economy is a economic development report, and we're really talking about our population and its ability to impact the entire region. A big piece of it is the $1 billion in lost annual income, and how we're seeing 5,200 fewer homeowners because of systemic barriers, and really having real conversations about what those barriers are and how other regions are able to counteract those issues and create new programming to ensure that we are providing advancement opportunities. So we were really able to share a lot of that data in that space. And I, of course, made sure everybody walked away with a copy of the report.
Good. We'll make sure to put the link here on the screen as well, so that way folks can get to it and have it included in our coverage too. I know our team has leveraged that in some fashion in a variety of ways, because it's a rich space for us to be able to go explore and understand different parts of economic mobility, which I think was a word that you used. You talked about those barriers. What have you found as some of the barriers that maybe you are trying to help the Fed understand that there's different types of barriers, perhaps that maybe they're not seeing all the time?
Yeah, the luxury I have in that space is there are a lot of banking partners in that space. So a lot of times, even though I'm having the conversation with the Fed Reserve, I'm able to have a bigger conversation with some of the financial institutions in the room, and we've been able to find some opportunity within that, and some chances for collaboration. One of the There's so many when it comes barriers when it comes to home ownership. I think one thing we've talked about with generational wealth is that home ownership piece, and really seeing the disparities in that opportunity to provide advancement. And so we were able to have conversations with other organizations that have strong CDFIs in their area to provide new opportunities, to get loans and to get access to capital, and also having similar conversations about small business and how we get capital into the hands of these Black-owned businesses so they can grow and really see a return in our region, really, from these businesses seeing that growth as well.
Well, back to the Fed, maybe what's maybe an insight or something that you've taken away from that environment that maybe you've brought back into the community?
that we can all look at the same issue and see totally different ways of how to resolve it. I think we go into that space with a mutual respect for each other about how we're going to resolve issues and have these kind of courageous conversations. But we don't always leave with the same viewpoint about how we get that done. I've learned so much about how everything kind of sings together when it comes to inflation and tariffs and these big conversations where it in one economy we're really talking about the impacts of community and bringing it down to day-to-day living, but I'm able to see a broader perspective going into a Federal Reserve that's been really really helpful when it comes to the work even here locally.
Well, the most important thing everybody wants to know is the interest rate going to go up or down?
I wish they would tell us.
Oh, they don't tell you that. Okay.
They
That's why we
don't.
brought you on. Yeah.
Well, we have another meeting in a month, and so I'll bring you the insights from that meeting, and I'll let you know if we have any updates on the interest rate at that point.
Sounds good. Well, Jerrica, thanks for giving us some extra insight into the Fed. And we're going to turn our scope a little bit now to looking to the future a bit. Again, I told both these folks, we're not going to make you have to predict exactly what's going to happen. But we do want to ask you to take a moment and I'll have each of you give maybe one issue that you're kind of watching that you think other business leaders should be watching. And then we'll open up for some discussion from there. So Bryce, why don't we bring you back and have you give kind of one issue that maybe you're looking to in the future?
Sorry, I can't really give just one. So I'm looking at oil prices. I'm looking at AI, which hasn't yet come up with increase in productivity that we might have hoped for, but it isn't. It has increased spending, and I think it is getting better. And then I'm looking at the federal government budget deficit with an eye towards that going up if the war continues. And one more thing, looking at growth in foreign economies. Japan and the United Kingdom are at least weak economically in terms of growth, and this the increase in oil prices has potential to create a global economic downturn.
All right, and Jerrica, maybe one thing that you're watching going forward, and or you could give 5 if you want to.
I won't give 5, but what I will say is we are really paying attention to what's happening in the space of AI. With this workforce and trying to develop a new workforce within community and upskilling folks, I think AI is a great opportunity for that. And so we'll really be paying attention to how that is implemented here as far as what new programs are available, how we can upskill those workers, and how we can make sure that our community is represented in that new endeavor.
Well, let's stick with the AI one for just a little bit. Again, we can't go any place right now where AI is not coming up in some fashion, but what I've been interested in is finding ways to talk about it through some different lenses. So, Jerrica, you talked about upskilling, and I hadn't really thought about it through that lens, but I know that it can be an exceptionally helpful tool in places where there might be some areas that are deficient in some way. So I'm just curious how maybe you're thinking about AI tools from a workforce standpoint.
Yeah, I mean, as a nonprofit, what I actually did a course at Georgetown. It was called Rising Strategies. That was sponsored by Chase. And so when I went to this course, we were really talking about AI technologies and how we could utilize that to ensure that we're moving the needle a little bit faster. Like, I'm a small office, so we're trying to get a lot of things done with a few people. And so AI has really been able to be helpful in that space. And I really see that as something that we should be teaching to the workforce as they're coming up and trying to find new opportunities in new spaces, that what tools are available and how you can see yourself in this work and how you could utilize it to ensure that you have a strong resume to enter the workforce with. So really that opportunity for new programming, outreach when it comes to AI and teaching the tools, not just handing them the website and saying this is what you do, teaching them how to utilize it efficiently so they can make sure that they're growing themselves in the process.
When you think about I think you mentioned productivity, and I'm curious. I don't think that's really come through in the economic numbers, if I'm understanding right. And I'm curious, maybe it seems to be this kind of conundrum, right? Everyone's going, "Oh, AI can help us be more productive," and we hear people talking about it in that way. I hear that all the time. I've experienced it, but then maybe from a pure numbers, Bryce, I'm curious. Maybe maybe what might be some hypothesis behind that?
Part of it is that it's a new technology, so people haven't figured out how to use it. So it's just like anything else when you have a new app or the first time you looked at a cell phone or the first time you used a word processor. So I'm somewhat optimistic that in the future we'll understand it better. Now I'm going to put in a plug for you and I here that College of Business recently instituted an emphasis in the management department that's for AI, teaching people that are interested in business how to use it and how to use AI to help business. I think you'll see more of that. And so as people get more accustomed to using it, we see what it does well and what it doesn't do so well. I think it has the potential to increase productivity, but it's just not quite there yet.
I was talking to a business leader yesterday over lunch, and he was saying he asked he serves on one of the boards for one of the colleges, and he was saying, do we still have people taking the library class, and we require that. Should we be requiring something with AI? And furthermore, should we be requiring professors and faculty and staff to also be taking something in that fashion? It was just an interesting thought process, right? If it's a base level tool, now I would advocate for the library because of how to think about research, regardless of knowing the Dewey Decimal System, but I think that more importantly, understanding good research is important. So, but it's just an interesting idea, right?
The library now has the UNI library now has a new course in AI usage. So it's kind of, what can you do with it and how should you use it? And we'll have some courses across the university on ethics. The math department has an emphasis now just developed that will be on AI. So in a lot of different dimensions, you're starting to see this reach into education in the sense of trying to help people learn how to use it, or how to use it responsibly and effectively.
And Chris, I would say I think that it's important that they still learn the library course. I would never advocate for that to go away. I think even how I utilize AI today, I'm going back to my college days of how you do research. I never want to put in a straight question and let AI respond for me. That's just to me an irresponsible use of the tool. But utilizing some of those research keywords and asking it to do some of that digging for you, those are skills that you'll still need even in the age, I think, of AI and technology. And as we're expanding even our African American Leadership Academy, we're trying to figure out how we infuse some of these new AI tools to make sure the leaders that leave there feel strong in that space too.
But education here is really important going forward because AI is going to require critical thinking skills. If you think about the output that you get from AI, it's mostly stuff to read. And so you need to be able to read well. And then the research skills are important because you should really be looking at the resources that it gives you, the sources that it's citing. And of course, education matters because it gives us the questions to ask.
I like that. I'm a journalist. I think that's the most important part. So, Bryce, I wonder from a data perspective, where would you start to see the benefits showing up, perhaps from a data standpoint? I know you mentioned productivity, but is there a specific indicator that you'd go, oh, I'm starting to actually see this showing up in that way?
Boy, I don't know. I can't think of anything in particular. I think at first it's going to maybe make mundane tasks easier. And then the question is, if it makes mundane tasks easier, will people require more people to be operating AI to run those mundane tasks, or is that going to replace workers? Although I don't have anything in particular that I'm focused on looking to see how AI is doing, other than just productivity in general.
Well, and it seems like the thing that people are reaching for to a certain degree is, and I'm going to blank on the name of the company, but former Twitter CEO's company that had a big layoff this past week. And he pointed to AI usage, and then other folks subsequently said, well, maybe it wasn't quite AI usage, but it feels like those large employment changes it's the most visible thing that people can see and go, oh, see, look, there's AI is replacing jobs. And so that's an indicator, but I'm not sure that I'm sold on that part quite yet. It seems kind of convenient to be able to use that as an example, but
Yeah, I'm not sure I'm quite sold on that either. AI can replace some jobs, some of the work that entry level people do, but you need to give people that entry-level experience so they know how to interpret what AI is doing. They need that experience within the corporation to be able to frame problems specifically to give it enough information to get answers that's relevant to the particular situation, that particular corporation or business.
We started with talking a little bit about Iran and the conflict there, and you mentioned oil prices. So as you kind of play nobody knows how long the conflict will last and what that's going to look like. But as you play that out, what are some of you mentioned oil prices? What are some of the other, you mentioned world economies, and maybe talk us through a little bit about what you're worried about or concerned about from a global economy standpoint.
So there are other economies that are more dependent on oil than the United States is now, especially some Asian countries. And so the dangers to them are, I think, somewhat larger. The United States is more oil independent than it used to be. We have more green energy than we used to be. We're more energy efficient than we used to be.
I think I saw that we're now the number one producer of oil, if I understand right.
I think that's right. And so it still passes through to raise prices, but I'm concerned about what will happen in foreign economies. And the other thing is more spending. If you've got more military spending, that means a larger deficit. Larger deficits tend to translate into higher interest rates, which makes it hard for us to tell you what's going to happen to interest rates with that kind of uncertainty. And it also means at some point that the government might have to cut its spending or raise taxes in order to finance. And it also raises, I think, some concerns that the U.S. government might be moving to a point where foreign investors don't have quite as much confidence in Treasury securities as they used to, which would also put upward pressures on interest rates.
Here specifically in Iowa, would those be lagging type of effects, or do you think some of the pressures that might come as a result of what's happening start to be felt more rapidly?
Some of that will start to be felt more rapidly because expectations build in. The more expectations rise, the more expectations increase of rising oil prices and concerns about the ability of the government to finance itself, the more that leads to higher interest rates, the more that leads to higher oil prices.
Gotcha. We're getting close to our time, and I want to give you each a chance to give kind of a closing thought. So, Jerrica, I'll let you go first, and Bryce, I'll have you wrap us up.
My closing thought is just we really want business leaders to care about the issues of economic mobility, and because it's directly tied to the regional economic strength. So we want communities to have access to stable housing, workforce opportunities, entrepreneur pathways, leading to strong consumer spending and strong small business growth. So the data from One Economy really shows that when those disparities close, the impact is really significant. So ending wage disparities alone, like I said, would add more than $1 billion in income to the Polk County economy. So investing in economic opportunity is not just the right thing to do, it's a smart economic strategy. And we really want to be able to provide the opportunity to strengthen the entire regional economy.
All right, Bryce, final thought from you.
I think we have to be really careful. I don't have answers. I'm not going to take a political position on this, but we have to be really careful about thinking what we're going to do with policy going forward. With AI and the possible impacts on the workforce, with rising inequality and income, we need to think carefully about what's the right path forward for policy, both in terms of spending and in terms of taxing.
Well, and we're lucky, of course, to have a voice here from Iowa that gets to help have some of that influence. So, Jerrica, thank you for your work with the Fed and carrying some of the water here for Iowa and some of the effects. And Bryce, thank you for providing some insight today and some of the background and the data so that we can be thinking about some areas. Again, our goal with this podcast is always to help provide people with a roadmap in some way that they can be thinking about ways that the economy might affect their business so that they can have the ability to think about making good decisions for their business and the community in some fashion. So a big thank you to both of you for being here to provide some of that insight. And of course, a big thank you to our segment sponsor, CLA. We can't put on programming like this without the support of our sponsors. So if you could take a moment to learn a little bit more about CLA as well, we'd appreciate that. And if you enjoyed today's show, please like and subscribe and tell your colleagues. Again, we firmly believe we're stronger as a community when the community has better information to make better decisions. That's what makes your business better and our community stronger. So thank you for watching. And until next time, keep your eyes up and peering ahead of Iowa's economic curve.